Welcome everyone to the fourth episode of the Futurum Equities podcast. We are at the 1 month anniversary. You got myself, Shy Blower, aka Stock Savvy Shy. We got the great Daniel Newman, aka Danny Dimes. What a day in the market. As right now, what's SoFi even at right now? Let me double check to confirm. Because we got
2179, 2179,
22 almost $22. We got Robin at $100. We got Bitcoin getting a new high. It feels like every other hour. And the market, every time it's dipping, like this morning at the pre-market open red, it's flat now. QQQ. So I want to pass over to you, Daniel. What's your thoughts on where we are in this market cycle, especially in the near term? Because it feels a bit frothy-ish in the near term.
I still think that despite the fact that the market is a bit frothy, I mean, look, you've heard me. I am a super bull on some of these names. I did a victory lap this morning to one of your posts, Shy, where you talked about all these huge gainers since Liberation Day. I knew that Liberation Day was going to be a blip. I knew that President Trump runs his entire strategy on delivering alpha. I mean, he literally will be disappointed if the market is not at all-time highs when he leaves. So I just kind of knew there was like this comfort in it. And again, there was a lot of unfamiliarity about what was going to happen for sure. But I also knew that there was just we talk about like the Besant put and the different put. There was a Trump put. There was always a Trump put. Mm-hmm. And there was always knowledge that there was this kind of that there was a worst case where he would pull the lever. And I still remember the day, by the way, right after in April, it was like the 9th or 10th or whatever day that was, like a week after it all had gone down, that there was that, tariff delay. And then it was like, oops, no, there wasn't. But there was like that, the market went like crazy up. And then the next day they actually announced that they were going to delay it. And then the market did the up thing. Like I said, even that I think was a test. So anyways, now you got situations where you have Robinhood up in the hundreds of percentages, 189 or something. You've got SoFi at 121% up. You've got HIMS. And then, of course, NVIDIA. NVIDIA is a triple digit, very mature, successful growth company in the Mag 7, seeing triple-digit gains over the course of just a couple of months. It's incredible. But I think it's a not all names are created equal moment, Shy. And what do I mean by that? Like, in every inflection, we haven't hit what I think was like the 21, 22 SPAC bubble where you have companies that have no revenue, no customers, no product, seeing multi-billion-dollar valuation. To me, that's only happening in quantum right now. That's the only place I'm really seeing that happen. So you're looking at names like NVIDIA, where depending on the estimated growth and what you're looking at a forecast, I mean, you're seeing them still in the 20s to low 30s in terms of forward multiple. So you're saying at this new valuation, at $4 trillion, there's so much business, so much growth out there that there's still a company that you can look at and say it's not really crazy expensive, given that most names in the S&P trade in the low 20s, 18 to 22, 23. So I look at that and I go like, they're not crazy. Now, Robinhood, they're in the 70s and 80s. SoFi, it's now in the probably high 30s or 40s on multiples, and it's pushing up every day as it keeps running up. And you start to go, okay, these might start to look a little expensive and certainly could have a meaningful pullback if conditions were to change. But I still think it's a stock picker's growth market. Like, pick great companies that have great forward outlooks, and you're going to do really, really well if they have revenue, they have profit, they have cash flow. What I do think is it gets a little spottier when you get into regulated industries. That's why Oscar, everybody's kind of vacillating on whether that was a good one. HIMS, there's a little risk because of lawsuits and legal, despite the fact that I love it and I think it's going to do great. And then like any company that doesn't make money, like I still kind of say run. Just there's so many good companies to invest in. Like, why buy into something that doesn't create cash flow?
No, I mean, I agree with that sentiment. I think you have to be very specific, especially at this stage of the market rally, on where you're allocating your soldiers to. Because you mentioned S&P 500. It's like, I think 25 times earnings now. That's not egregious on historical levels. And I think a lot of these like big tech companies like the NVIDIAs, the Metas, the Googles out there, they're catching bids based on multiple expansion, but it's also on an assumption going forward that AI is going to be a huge lever for them to pull on margin expansion. And you're seeing it across the headlines. It feels like every week, big tech saying layoffs, like AI is driving 50% of the code, 30%, et cetera. Like, These are real things that are just getting started that's going to scale significantly. However, certain pockets like quantum, like I do think quantum is inevitable, but who knows the timeline on that? It might not be right now. The way the names are running, it feels like it's going to be the next 2 years. I just don't know.
And not
But
all created equal, by the way.
yeah,
I have a relationship with INQ. I've advised and worked with. I always want to put that out of the way. The work they're doing, the acquisitions they're making, the accretive decisions, the growth. You saw the recent equity raise, the warrant deals. Like there is a large market of people that clearly believe that company is going to perform. That company has
huge demand.
revenue.
Yeah.
That company has product. That company has customers. But there are companies in there that like, I don't know what they do. Like if they ever have they ever actually created a qubit that has any sort of fidelity, like and used it for anything yet, or is it just like some research paper? And it's
Yeah,
like
no, yeah, a
that's
lot of it's
crazy though.
sci-fi. Yeah, 100% agree with you. Like the utility player is clearly IonQ. The rest, it's a little sci-fi dream. But we won't get into quantum. It's a hot
Yeah,
topic
yeah,
right
no,
now. But
it
also,
never ends well.
yeah, we'll pivot away towards like the other industries. Like I think I don't know, Hims and Oscar, for example. Like a lot of people are seeing like what's the next Palantir, next Robinhood. It's really important to kind of identify the difference in industry because those industries, healthcare, it's the red tape bureaucracy is through the roof. It's very difficult for even the early disruptors to scale. There's going to be bumps along the way, and those bumps are going to be regulatory. Those regulatory bumps take time to phase out. So, although Oscar is trying to become a rational player in this irrational industry like healthcare, it's got a really really interesting approach towards kind of becoming the Stripe of the healthcare infrastructure, but that's going to take years and years to kind of price that in. Like you might say it's trading at under one time sales, so like you're buying at a very opportune time when that narrative isn't being reflected in the stock price. I agree with that. That could be true, but
Are you
this
playing
year's
it, Shy? Are you playing them in any way? Are you
if
in?
it I have a specific level that if it hits, I'm going to be playing as a
What's that
trade.
level? Just curious.
13 bucks,
Okay,
$13.
so I'll tell everyone, like, because there's a lot of tech companies we work with that I don't buy personally. But on the other side of that trade, like Oscar, I bought a little common at about 18 just to sniff test whenever, but 15-10 puts has been what I've been playing, 15-10 spreads. So I sell the put on 15 and I buy the put on 10. I basically put it into that spread range, and I've been able to get about $2 a share. It puts me in at $13. So the mass of my position is if it stays below 15, I think through like September, I'll be buying it roughly $13 a share. So it's funny, you and I are seeing the same level as basically the go all in level. I think I would end up with several thousand shares. I think I have like 70 or 80 contracts at that level.
So
So
let's actually go over the chart real quick live. I think that's a feature that we a lot of people don't do on these podcasts. Let's see what. Let me see how
are you a chartist now? Because I'm not a chartist.
I wear my trader hat sometimes. I think it's probably 10% of the time, if that. But for this example, let's see. Are you able to see it, Daniel?
Not yet. So are you sharing? Do you have to click another button when you actually hit your? There you
Boom.
go.
All right. Let's get
First time user and caller. I love it.
Okay, so let's see the chart levels over here. Let's get rid of all. First off, this is a massive level right here that's trading at right now. It's holding it pretty well. And what is this blue dot indicating? It's the average VWAP from whatever breakout happened in March 2023. If you look at it closely, huge volume profile. Look at that bar on that weekly chart. Ton of volume came into his name. Something catalytic happened here. I don't know what, but it was a new characteristic of the stock going forward from that moment. So I clicked the volume profile from here, anchored at VWAP. It's been holding pretty steadily in the pullbacks in the Q4 of 2024. This slipped over here like everything else did during this Terra 4. So I'm like, it's fine. I'll excuse that because that was a man-made bear market that quickly corrected itself. So once it recovered from here, it's held pretty well since then. So right now, that level is, look at that, 1465. What's it at right now? 1468. Where has the bottom been in this price today? Kind of around this level. So it needs to hold. And if it doesn't, the reason I think 13, I love 13 is I want to do it from the 208 EMA. I think eventually it's going to go towards this level as the next stop if it breaks here. I think the risk and reward's really great over here, especially from if you want to use the tariff tantrum bottom. And they're yeah, so I think over here is a great place for a trade for me. I actually might do a short-term trade here, depending how we close today, but that's kind of how I use the charts. It's very green, as you guys probably could tell. I know Dano, this is probably a similar level as you do on charts, but
Yeah,
it's
I don't consider myself a chartist, but there are some
not
that
at
I
all.
follow. The one thing I will say though for sure is this is not a stonk. This is the debate I was having is like, are we back in the frothy stonk days? And I think there is some of that. And so that's really important though for people out there. You know, the way I evaluate companies is I really do evaluate them purely, as because we largely track tech. And I look at it purely through the fundamentals of the technology itself and then the fundamentals of the company. And so what I mean is like you can definitely buy right and buy wrong. But when you buy really good companies that have good cash flow, that have leading products, that have moats in the markets, and so you put all those kind of characteristics together, timing the market is, of course, beneficial, but it's more luck. I mean, you do really want to buy into great names and just invest in them and wait. I mean, there are some companies that, are frustrating. You've been talking a lot about Google this week. Like, for instance, that's been a bit of an Alphabet. That's a frustrating one because it's incredibly performant. The company makes tons of cash flow, but from a price discovery standpoint, it feels like it's super range bound. There's a lot of kind of FUD in the market about, OpenAI is going to replace it, or Zuck's going to get more talent and he's going to leapfrog them, or Apple's going to get rid of, Google and in the browser, which is a big deal for them. But like they just execute every quarter. They put off billions and billions in cash flow. They grow revenue. They've diversified their business, and they have a bunch of undervalued businesses. I think you pointed out like Google DeepMind, not really valued in your calc, Google Brain, Waymo, and there's not even, so I understand how sometimes people are like, you can't always win that way, but I do think when you do the zoom out on companies like that, you tend to win on those ones as well.
Well, do you think there's anything they can even do to change that narrative? Because it feels like time's the only solution for that narrative to finally change. Like once like AI matures, once search evolves into what it's going to become in an agentic AI world, like I feel like time is the only thing they can do for it, so that they're not like really making the effort on the PR front.
They may have to do more. I'm not kidding. They may have to do like a more of an Apple strategy. There's just maybe a maturity curve with some of these really, really big companies where one is always like when you're thinking Mag 7, it's always kind of one versus the other. And if you sort of rank them, and you've been asked to do this on TV lately, but like kind of rank them, like Apple's not even really a growth stock anymore. I mean, the company doesn't really grow, but they've spent $600 billion buying their stock back, and they have a moat with iOS that's definitely kept the people in their ecosystem. And you kind of have a way to allure investors because it's kind of safe. It produces, it tends to go up over time. And then you kind of have the other end of it, like an NVIDIA. And like I literally say sometimes, it's like, why does anyone buy anything else? And again, I'm not personally in NVIDIA because we have an advisory relationship through Futurum with them, so I don't personally hold shares of NVIDIA. I've made calls on NVIDIA for a long time in terms of helping people understand why it's a great investment. I wish I could have invested when I saw the value. But having said that, like, why be in anything else? I mean, they have 90+%. You look at pretty much the consensus across all the analyst firms, including ours, is that they're going to have anywhere from 75 to 90% of this $1 trillion market. It's like, and then of course their cash flows exploding. And they basically are increasingly controlling their whole stack. You look at the relationship with CoreWeave, with Nebius, with like they're in all the things that basically allows them to deploy their own technology on a global basis so then you get the companies like the Microsofts and the Googles and the other ones that kind of sit in between. And it's like, these are definitely like kind of like semi-growth names for people who are looking for safety. Like you will see a retraction for sure, a retracement on a meaningful economic situation. If interest rates were to suddenly go up, but not the same way you're going to see with Robinhood. I mean, if Robinhood or SoFi, if like tomorrow Trump comes out and he's like, actually, we're going to raise rates, those things would fall 50% in a weekend. I mean, that is how like volatile they are. So it's kind of always this mix of like risk appetite, growth expectations, sometimes dividends a factor. Are you looking for something that creates cash? But I mean, I think for Google, probably the best catalyst is getting some of the regulatory scrutiny out of the way because that sits there with them. And I think the other is just, continuing to kick OpenAI's ass. Like, they're really sort of like, there was this idea that OpenAI was going to take them out. I think Satya is one of the best Google employees right now out of anyone. Satya Nadella. I joke, he's not an employee of Google, but he's basically completely pinned OpenAI in. They can't do anything right now. They can't really raise all the money they want. They can't go public. They can't change the corporate structure. And meanwhile, Satya is just kind of slowing them down, which has helped XAI, Grok 4. It's amazing. And of course, Gemini Advanced has like totally changed the whole story for Google. But I think Sundar is doing a good job. He's just executing. I feel like I'm constantly defending them, Shai. Like I'm constantly.
No, I feel you just said the posts I've been making have been very tilted towards Google's because I'm kind of sick of the narrative. Like a lot of people I talk to, and same with you, like they know that this is all just FUD that's generated on the search evolving. It's not going to get demised into a certain point where it's going to become like the BlackBerry of this new era. It's not going to be like that at all. But you brought up a good point I want to talk about is one of the reasons that we're both bullish on Google so much is because of that control of the vertical stack that they have that no other, honestly, big tech companies really do have. And Vertiv got the news from Vertiv this week. I think that was a great example of what the AI tsunami is coming and what's like the pre-read of what it's going to happen for a lot of other companies in the future, where you can't just own one layer anymore and be safe because the hyperscalers are coming for everyone and it's not personal. They just want to control their own stack by themselves, closed ecosystem. Wanted to kind of get your thoughts on the Vertiv news this week, and this is like the beginning of a new trend in this new regime of these hyperscalers kind of phasing these kind of players out a bit.
Well, I think it's an and, not an or. And this is like, you and I have had this talk. I'm like the anti-zero sum guy. Like I just can't stand the number of people that have this obsession that like AMD can't win if NVIDIA wins. Wrong. And Vertiv there will be plenty of data centers that will benefit from cooling technologies, even if AWS does vertically integrate. But I do believe the point was that there was sort of this belief. I mean, you kind of stood up. You called them one of the 10 biggest winners of the 1BBB. And obviously we're all eating a little crow because that's a Futurum Equities call. And so we had that call. Now we got to go back and explain it. But the explanation doesn't necessarily change. You got to assume that every one of the Mag 7 companies and pretty much every one of the hyperscalers are going to do everything they can to vertically integrate. This goes back to the whole OpenAI is going to use TPU thing. And everyone, was like, oh, there was a retraction and NVIDIA posted an retraction. Listen, every company like OpenAI, XAI, Oracle, they're all trying every different variant of silicon that's available to them to find the best economics. No doubt, NVIDIA is the fastest to deploy, best economics to scale today. But they're also taking a huge cut of the margin out. So why has Google been so obsessive about building its own vertical stack? Why is AWS, with the acquisition of Annapurna Labs, building Trainium? They've taken half the market share. And you just go back to Graviton, the CPU. They did Graviton with ARM. They partnered up, and now it's 50+% of AWS workload CPU is on Graviton. Yeah, it was to run from Intel because it was the same problem. And so these companies, what happens is you hit a certain size, you hit a certain scale and a certain growth, and you've got to find new ways to create margin. And the margins come from two things: sell more and higher profitability. So vertical integration. Apple did the same thing. They took out the modem providers. They take out the network card providers. They pull all these things together where they can to basically try to build the stack. So this is the way these companies operate and perform. So companies like Vertiv become acquisition targets. Very likely could be an acquisition of one of the hyperscalers. They also tend to do very well early on, a very similar kind of situation with Astera, where Astera fits in. They got a very specialty type of technology to power network scale. But at some point, you can assume that these companies are either going to build it themselves, they're going to OEM it, they're going to partner with a Broadcom, a Marvell. So out of the box is faster, but over time, vertical integration is more profitable.
No, I think the one word to highlight what you're just talking about right there is optionality. I think these hyperscalers just want optionality. These bigger players, optionality, have some more free will on deciding what margins to pull and what levers to pull for expansion opportunities. So like when Vertiv, like you just saw Vertiv's price action since that news got released, it was like down 13% at one point. I think it's almost filled that gap on the V shape. So I think a lot of sell side notes and buy side notes echo what you just mentioned right there, where it's not going to be a zero sum competition. It's just going to be an add on. It's not like they're just getting a seat at the table. Doesn't mean Vertiv is not going to be sitting at a table anymore.
I'm
So that's really
optimistic.
important.
I'm actually
Yeah.
optimistic for Vertiv. I also think you have to kind of look at Horizon though, and just understand that the biggest cloud companies are going to constantly be taking pieces where they can.
Mm-hmm.
But it's not zero sum.
Yeah, no, I agree with that. I also want to talk about some news this morning or this week. It was regarding XAI is going to be or Grok is going to be infused in the Tesla cars, and I think the inevitable. My take is
Shut up,
inevitable.
Shy.
If he ever does that to me, I'm framing it, putting it on my office wall, and like that's me cementing myself.
To be clear, my friend and I, to be clear, that was a win. That was a big, humongous, ginormous win that Elon cared enough to take the time to reply. And, if nothing, it just made his star bigger. So, kudos. Inside baseball, Shy, I sent a note to our comms leader, right? And I said, like, how do we get a shut up? Like, hey, what do you need from our daily notes that we can start getting more shut ups, like from people that matter? Like, I don't need like randos like telling me, you're the greatest. What I need is like real high impact conflict to know that we're saying things that matter.
Yeah, totally. To make that, I think it was a stamp of approval, to be honest. It was a great one. But I think it was the main point on one of Dan's posts was XAI and Tesla will merge. And I think that's inevitable. It mimics the relationship that OpenAI and Microsoft had a couple years ago, where they kind of need each other. It's a win-win. It makes too much sense on the synergy fronts. But for you, Daniel, I know like this is kind of not outside of the tech angle that we're like specialized in, but it's adjacent. What do you think? It's a pretty polarizing time right now to be a Tesla shareholder. It is just the political tax of owning an Elon company is very real, and we felt that this year. How do you think? What's your perspective as a Tesla shareholder of like what you kind of want to see from Tesla, and like what's holding you onto holding the stock, except for I never sell stock approach?
Yeah, it's like my reputation. I just hold forever. Look, first of all, there's kind of always the bets, but you don't bet against Elon in the long run. His ability to sort of see the trend lines and look, maybe one really great clarifier right now is just XAI alone. 2 years ago, XAI was an afterthought. We were talking OpenAI, Anthropic. There was even companies like Cohere that were getting attention. Nobody like when Elon started XAI or Grok or launched his own LLM, it was like, oh, he's getting in too. Remember, he was also a guy at the time in the beginning, and I don't know if this was intentional or by accident, but it was actually trying to slow AI diffusion. We need to slow down. It's a existential risk. He was kind of signed on to that in the very beginning. Changed his tune. I said, like, maybe he wanted to slow the market down. Maybe he genuinely had concerns and they were solved. But while Mark Zuckerberg stealing OpenAI people, stealing Google people, stealing, I believe, Anthropic people, no one from XAI is leaving. There's an excitement there. Now the whole Mecha Hitler thing, like, yeah, there's like a maybe going too fast problem that they have going on, but like the model is performing incredibly well. And so this isn't Tesla itself, but this is about the way he innovates. There's a lot of criticism right now coming out of China that his cars no longer kind of are the tip of the spear for innovation. In China, they want cars that have selfie sticks built into them, and they want all the extra, video screens everywhere and application integration. And that car was sort of minimalistic with the one big panel. But the point is that, and so everyone's looking and like, hey, are these a little long in the tooth? Has innovation sort of dissipated a bit? Has there been only focus on the autonomous driving and not necessarily on the whole ergonomics of these things? But it could be a flip of a switch. Like something could happen, and all of a sudden he turns the tide. But I'll be clear, he also gets the most benefit of the doubt out of any CEO I've ever seen. Like, we were supposed to do that full cross-country drive, I think in 2017 autonomously. It's 2025, and that still hasn't happened yet. But But it's just one of those things you don't bet against. Having said that, like, this is one where fundamentals make no sense. It's 100% like conviction. This is a conviction name that if you believe in what he's doing, and I also do agree with you that at some point it becomes like a super company. I don't even rule out SpaceX all being one part of this giant mega conglomerate, transportation, distribution, communications, media, payments, and rails and AI. Like, I'm just saying, like, there is every possibility that could get done, and this could become the world's largest company. I mean, literally could do that, and there's enough synergy there. While Jensen's building the future of robotics and physical AI, Musk is trying to move, people to Mars. And so it depends how long your horizon is. So I don't know. I got a lot of opinions about it, I guess.
No, you're not wrong though, because again, I think a lot of people are forgetting about what Elon's trying to solve. If he succeeds, which historically speaking, he has every time he's done something, building the AI network or the neural network for mobility and robotics is a ridiculous TAM by itself, like ridiculous. And there's only a handful of stocks out there in the market that are as disruptive this early in a secular growth theme that has not moved their stock price in 4 or 5 years. Everything else has gotten re-rated and priced accordingly. Tesla hasn't yet, due to all these the narrative change going from EV company to AI. That takes a while to phase out, aka Google shareholders. Like, Tesla might be a good comp to see how long it takes to really phase that out. But I think the risk is there, especially in the market right now. We mentioned it's pretty overextended. A lot of companies, multiples are expanding in this AI, in the AI trade, not Mag 7 or the big semiconductor players. I'm saying like the Palantirs, the Cloudflares, etc. Like, those names are pricey and they got re-rated.
Biggest risk of a few of our equities, the AI 15 that's been all over the media and the press has been probably that the companies we like over the long horizon will execute and earn their rankings. But there is some definite short-term volatility on both the Cyber 7 list with some of those names, like a Rubrik that's done really well, but has a lot of momentum, doesn't necessarily have the fundamentals to support it at this point. See a little bit of that. Like you said, we didn't have Cloudflare on that list. I actually think Cloudflare is super interesting, though, just because of what they're playing with, kind of the blocking the LLMs from using. Like, God, you think so many publishers and so many people that are the creators of the content on the internet that want to have a long-term business.
It's genius. It's genius. I think they're going to be supporting. I think
they're Jesus, but it could be.
It could be. It could be. No, I think. Do you think that Cloudflare is kind of the closest thing to not a cloud provider, but like being that fourth disruptor as a GCP, Azure, AWS, like what they're trying to solve through their workers AI, and like through that.
You got to put Oracle on that list, so it has to be
Oracle. I always forget OCI. Oh my God, Oracle.
No, I mean, Oracle is. I think at least the revenue they're disclosing could easily put them at parity with Google in the next year to two, just because of how fast they're growing. But I think Cloudflare is onto something. I don't know if it works. I don't know if we have any sort of slowdown, and I don't know that you can win depending if they can figure out the business model to monetize generative search. If Cloudflare could win, but as long as there's no monetization, where basically you're now seeing 1 in every like 500 generative searches on OpenAI leading to a click, and it's like 1 out of 2,000 on Anthropic. It's 1 out of 18 on a Google search, and so the net is like the conversion, the publishers, how they make money, the quality of the LLMs, especially as it pertains to kind of that real-time fire hose of news, is dependent on high quality content being out there and available. The less that's available, the less quality that you can train the models and the kind of tuning, training, and advancement. By the way, this is also where Elon's a genius with owning Twitter, X. I mean, talk about getting the data. Like, XAI has the only problem is the data is clearly racist. I mean, Mega hit like the fact that thing turned so fast. If you remember, there was the same situation that happened with Microsoft several years ago, they put a chatbot out and like instantaneously it turned racist on Twitter. This was before Musk even owned the company. You were probably like 12. But the bottom line is that, like, I mean, the thing, it self-actualized. It named itself Hitler. Like, this wasn't like human, but it was driven by the training, which means like the content on the site is so dark. It's not the people following your trade advice or your tech advice. I mean, this stuff can get pretty dark pretty quick.
I mean, like you mentioned it. The quality of the model is purely correlated with the data that's infused into it. That's exactly why Meta spent 15 billion on Scale AI, essentially to fix their data labeling issue for the reasoning models. Yes, they got Alexander Wang in the process. That's probably majority of it, but it's also so Google and OpenAI didn't have that access anymore to that data labeling that a lot of people in that space loved using for the reasoning models. So I think Twitter by itself, like, is there a better sentiment read on for data than Twitter itself? I don't think there is, and it's in-house. That's another reason why I'm so bullish on Google, is because the amount of data they have in their suite of products is the reason Gemini is so powerful so quickly. I don't know what generation they're even on Gemini, but it is so much further along on their development stage, like every couple months, than, I don't know, a Llama, which is open source, rents on NVIDIA's chips. There's only a certain capacity they can really innovate, and I think Zuck is clearly finding this issue out recently. That's why he's like sprinting right now to catch up. But Gemini is really underdiscovered because of that quality of data. Like, what's your take on, like, I actually do want to know, like, what do you think Gemini would be valued at if it was a separate holding outside of Google, when we're seeing these like crazy price targets of like an OpenAI is worth $400 billion?
Right. What does Google say? Like 1.7 trillion on value?
Yeah. 1.7, 1.8.
It's one of those weird phenomenons where I wonder if there's any actual additive value for its AI investments. And why do I say that? Because you could easily use discounted cash flow models to just have its search business and YouTube business support that valuation. It's huge. The amount of cash it creates, the growth, and the moat. And again, there's a lot of people, the argument, right, is the moat is being taken out. But if you actually use Google lately, you'll see Gen AI is right there. And I'm telling you, my parents have not moved away from Google yet. Like, they've not, they're not on OpenAI. They have not downloaded another app. They are sticking with it. And I think more of these sort of pedestrians to Luddites that are out there that do not think and wake up all day long and think about tech are going to move a lot slower. It's the same reason Apple has a moat still. Like, there's so many reasons you could argue that people should move to Samsung or a different device just because of the tech, but people don't care. So valuation, I mean, you could easily, and especially if you think about the stack from an infrastructure standpoint, because Google has the best infrastructure stack. They have like a mini NVIDIA inside. They have, their CPU is a little bit delayed. They were a little late on Axion on the CPU side, but on the actual TPU, I mean, remember, they're training their own models. They're training their own. So their Gemini Advanced model is trained on TPU. So they have a very highly performing model, and they own the stack on the training on the hardware. So they have hardware, they have brain, they have DeepMind, they have autonomy with Waymo, and then they have, of course, they have the software, and then they have the whole platform. It should probably 3 times what OpenAI is worth. I mean, again, this is back a napkin, but they do way more. I mean, OpenAI is largely driven by its talent. They don't own infrastructure. They don't own the chips. And most of the people that built their models don't work there anymore. So, I am definitely not an OpenAI super fan. You will not hear that from me. I do think some of their models work incredibly well. I've used them. I'm impressed by deep research. But it is a bit commoditized, Shai. It's not like you can't get a great outcome from Perplexity, which, by the way, we should talk about that later. In Apple,
or the China models like Gwen. Gwen's great. Yeah.
I don't use DeepSeek.
No, I think Alibaba's is really good.
Alibaba's right. But I'm saying I don't use DeepSeek. Like, I would rather have the U.S. spying on me, because I always assume my data is going somewhere. I just mean I'll keep it here, being spied on locally. But I just mean, like, the Grok core is amazing. I mean, it's absolutely amazing. So we have choice. So, like, OpenAI is kind of being rated and priced like it's got a moat. I'm not sure what the moat is anymore.
the mode is super intelligence, AGI. I think that's their only North Star that
But they
makes
don't
sense
have
at
it.
this valuation. They don't have that. That's why it's super risky. Because, like you mentioned, there's an oversupply of models now that are really good and really strong. So that's why you kind of need the foundational models need to be paired up with actual hardware. You can't just be a foundational model player anymore, even though OpenAI just has no, correct me if I'm wrong, they have zero angle on trying to conquer the hardware part, right? They're not trying to create their own in-house chips.
Well, he talked about it, and
He
there is
talked
some
about it. I haven't heard
rumors.
about it recently
There
at
is
all.
rumors that OpenAI is partnering, or that there's a tape out of some type or something going on with Broadcom. Clearly, right now, though, they are still very highly dependent on NVIDIA and
Mm-hmm.
have trained some really amazing models with their technology. But remember, I mean, Sam was going to build a $7 trillion fab network. Sam was going to
Oh yeah.
replace web browsers. Sam was going to replace search. Sam was going to, build a pendant with Jony Ives and replace Apple and iPhones and everything else. And then I think lately he said he could do better than Waymo or Tesla. He could do ADAS better as well. So I just worry about like this diabolically. Every time I hear him speak, I think of Stewie Griffin and or what was his name, Montgomery Burns. Like excellent,
uh, I'm
you
not gonna
know,
be able to get that out of my head now. It's
yeah.
Stewie
Well,
Griffin
just
every time you talk.
I'm going to dominate, take over the world, and I mean he's done incredibly well. Like me, I'm such a loser to literally sit here and pick on this guy because like look at what he's accomplished. I'm just saying like he's got formidable competition in all these companies except Apple. I don't know what Apple's doing, totally lost. But like Google, Amazon, and of course all the partnerships, XAI and Tesla, they're doing amazing stuff with AI as well, and it's very democratized now, and and there is a plethora of players. So valuation like that to me tends to need to be based on something that's a moat. I mean, they're the most expensive unicorn, most expensive private company on the planet right now, I believe, or it's close to SpaceX and
Yeah, they're neck to neck
yeah.
for
So
sure.
it's in that range. So you'd want to have something though that you think can't be suddenly taken away like Vertiv happened. So.
Well, so what do you think the aftermath is going to be from a lot of that talent, the boat leaving that org towards their competitors? Like, do you think that's going to kind of change the way Sam runs things, or maybe the innovation from GPT-4 to GPT-5 is going to be extended, and now the competitors are going to probably catch up now, and now there's a real issue on OpenAI. Like they're not profitable, and they've been doing these initiatives based on each funding round gets higher and higher. At a certain point, it's going to hit its head against the wall.
Yeah, that's what I've wondered, especially with Microsoft. I really do wonder, like, if Satya is not. I mean, they've done amazingly well. Their investment, the initial 10 billion, that got them
Yeah, it's
nearly
like
50%. Is
crazy.
probably worth 150 to 180. I mean, talk about passive returns.
Yeah.
I'm going to look to Satya and Nancy Pelosi for all my future stock advice. But the bottom line is there's risk everywhere there. Now, there's also opportunities. Like clearly, Masi Son from SoftBank.
Mhm.
He's an open AI guy who wants to invest big. He's invested in ARM. He's invested in Ampere. Like there's a bunch of these technologies he's putting together. So Stargate could be an open AI powered thing. Like that's all sort of naturally looks like it could be coming together. But I also, like I said, I just see so much competition. I see so many cases where it's going to be mixture of experts, many models. Kind of way we're getting to agents is the agents. Why do they have to be limited to anyone? And why does a
Mhm.
user have to be limited to anyone? That's kind of like what Perplexity did, right? Is it's like we'll take all the models and we'll just make it easy and accessible, and we'll sort of weight and balance and bias out and give you the best answer in this sort
Well,
of many models era.
let's talk about Perplexity because I think their current valuation now, I think it's 25 bill plus. I think they're inevitably going to get acquired. It's just they're really great at cogen. I think that's like their niche. I think that's highly valued among the Apples of the world. I think they're never going to go public. They're going to get acquired. What do you
Investment.
think?
Uh, yeah,
What,
no, I mean, they have some pretty good retail investment platforms now. They've done a nice job for for data for like you.
yeah.
for
Huge.
me.
It's huge. But like, why do you think these players, like Apple's waiting to acquire that kind of company, for example?
Apple's
Like,
not going to do it.
you don't think
Apple's not
so?
going to do it. No, no, no. There's a bit of a, heard this said from a few other people, but like not created here thing that goes on there. And like this is one of those things that it just seems that there's so much arrogance. And they lost their best AI person this week to Meta. 200 million, dude.
And by the way, Tim Cook's salary is 95 million a year.
Yeah, I thought it was
Just
like
want to throw that out
74,
there.
but I don't know the Black Scholes method. I don't know exactly how it's figured. But it's basically it broke their pay scale. But they lost
Yeah.
their COO. They lost. Well, he stepped down, and he's going to do a lesser role and then leave. I mean, is Cook cooked? That might be the real question we should ask here. But I don't know that Perplexity gives them everything, but it gives them talent, which a lot of people are doubting. Does Apple have the talent? And and people, I think, like the Perplexity experience, and I think it could be Apple-fied, where it's very pervasive in the Apple operating system. But the thing is it's not deep integrated proprietary knowledge that Apple could use in its core technology, and so it really isn't solving the whole talent problem there. For me, it's
Well,
intent, Shai. It's about intent. It's about showing that we're willing to invest in talent and invest in technology because we understand the risks of being left behind.
so do you think there's any component? I forgot. It's Alphabet paying them like 20 billion a year for their search to be on their phone. I forgot what the figure is,
Yeah, I
but
think it's like 18 to 20, but
do
I
you
think
think that's
it's
what's holding up the acquisition for Perplexity? Because if the inevitability, if they do acquire Perplexity, it would replace the search on all their devices.
they're already doing it with OpenAI. They already have a partnership and built in with OpenAI.
But it's an add-on, not a replacement, right?
But what I'm saying is it fundamentally does that where people now using Siri can go to OpenAI, which would
Uh,
certainly impact it. My point is you're changing the user experience materially. So I think Apple, I don't know. Like I said, I don't have the
well,
insider knowledge there to think, but it's so obvious from the outside that something's broken. I guess what I'm not seeing is from the inside. That's just never a company. Things never leaked. People never left. It's a
mhm.
phenomenon. But gosh, on the Mag 7 right now, I don't know, but like it has to be the worst. It would have to be the worst investment on that list.
I mean, it's acting like I think the market's at all-time highs. I think it's down 20% year to date. It's like it's definitely not hiding away from the fact that they're disappointing or breaking itself apart from the Max 7. But let's get outside the Max 7 and let's go to a different area in the market that's been freaking roaring, which you have been buying the dips on first 4 months of this year aggressively. And that's Robinhood and that's SoFi. Two names
Woo.
that wow. I think the daily RSI in SoFi is an 84. I think that's crazy. The momentum it's had.
And it just
What?
keeps going up, which
Yeah,
is
it just
crazy.
keeps
Like
going up.
it's in the pre-market, it's down. Tariffs on Canada. The minute the market opens, it's got like. But remember, 15% of the float is sold short. And by the way, people are adding to their short positions right now during this current stage. I think there's 3 or 4 million added short over the last
Wow.
week. I don't know exactly where it's at. I don't track this, but like I think it's too liquid to totally squeeze because there's like 80 million shares traded daily. So it's like a full on. It's not going to have a GameStop kind of squeeze. I don't see that happening. But there is clearly just a ton of momentum. And it's you and I talked about this like when it hit like 15 or 16. We're like it's showing some of the same sort of characteristics to Robinhood before Robinhood did what Robinhood did. It sort of had that long, kind of horrible accumulation, and it would have a few look like moments where it looked like it would break out, and then it didn't, and then it kind of did. So this is going to be a real test. I mean, I think you said to me, it hasn't hit its all-time highs yet, but remember, it is trading about $5 or $6 below all-time highs, and the company's like 100 times the size now. It is, and it's profitable. And they're doing crypto again. They're doing, they're bringing options back. They're doing this payment rails with Bitcoin. They're
Well,
doing.
what's the craziest part is more than 50% of their business now is non-lending. That's the transformation they've had in SoFi the past couple of years, which is wild to see.
Yeah. And they're also, they are seeing membership grow very quickly, and they're doing some of they're starting, like Notos took a page out of the Vlad playbook a bit about doing some of the cool stuff, like making investments into private, like this week, real investments into funds that hold names like SpaceX and OpenAI. They announced that and made that available to their users. It doesn't have the same cachet as Robinhood with kind of the cool FinTwit investment bros. But it is starting to catch names. You're starting to see names that didn't really talk about it, which is always a bit of a sign of life for a company. But look, like I said, I mean, I'm incredibly long here, like 6-figure position, not dollars, shares. I am big time long in this name.
Yeah, you should hear about the weekly profits he's been getting the past couple months. It's wild.
I don't want anyone asking me for loans. But I also, I mean, like I've suffered, like I've literally suffered with this name, watching it improve fundamentally. And the only thing I could keep reminding myself is price follows fundamentals. But if it could break out past 27, 28, and you use the word price discovery into price discovery, there is a real shot this thing could run to 40, 50. Last point I'll make about SoFi, maybe you can talk about Robinhood. I am long Robinhood, but I'll let you talk that side. Is Noto and the leadership team has over $400 million of PSUs, performance stock grants, due to them if they can get to $45 a share and hold it for it's like a 4-week period by the middle of 26. So right now, the executive team in that company has massive at stake to hit that number. I sent you that chart. It is a huge amount of dollars that their executives. So I do think there's a bit of pulling out all the stops now. Like if there's a time, if you're the management of that company, to start, so they announced their earnings super early, which is almost always a good sign that they're going to be reporting really, really early this quarter. If they have like a blowout where they beat by like a really meaningful amount on this, thing could totally break away. It's got that sort of feeling around it right now.
No, it's the base it's been trading on for years. Is the longer the base, the more explosive the price discovery. So that's why if it does break all-time highs, it's going to be explosive, especially when it's not that ridiculous of a valuation, to be honest, right now. So it's interesting. And I know like a lot of times that we talk, Robinhood and SoFi are always correlated with each other, even though they're just two very different components of the fintech ecosystem. For example, like Robinhood is clearly building a cultural monopoly on attention and behavior, and you're seeing that with their product reveals every couple months. And SoFi is engineering a financial stack that's kind of compounding quietly behind the scenes, and both approaches are credible. It's not either or. That's why the zero sum argument is always freaking dumb. And I know you agree with that sentiment as well,
both.
Daniel.
I bought both, and I loaded the boat on Robinhood after, because I didn't get a lot into it, but when it got crushed after Liberation Day, it was like, thank you.
Yeah. So I think I do think it's very important to like have that list at hand of the winners that you guys have been wanting exposure in, because there's going to be some kind of a pullback in the market. There always is. You can't say there's never going to be. Be prepared for that moment. But I do want to talk about, I know we're almost at the top of the hour, one area that you and I are very bullish on this upcoming earnings cycle that's starting next week, earnings. That's networking. And that's going to be like, you're seeing, the reason I say that is because Nancy Pelosi announced a new trade this week on Broadcom, call option. The Uncle Sam of AI, who collects the intelligence, aka inference, on AI. So, what do you have to say about the networking?
I got a tweet I want you to post. I want you to put this up here so everyone that's watching, really quickly. I'm going to drop it in there. I tweet so much now. You've turned me into that guy, but I'm going to find the original tweet here because it's about Broadcom, and I published it this week, basically saying, making. By the way,
it's a top three. It's top three in our Futurum AI 15, right?
It is. They are number 3. I'm putting it in the chat right now. You can post this while I'm talking about it. I love Broadcom. Here, we're advisor to Broadcom. Got to put that out there. But the stack that they're going to build is comprehensive. Now, remember, this is the company that's been partnering, largely doing all the TPU business. They do a lot of custom for Apple. They're doing custom for, I think you might know a few. I'm trying to think if they're public names, but I'm pretty sure Meta, it's public that they're doing the Meta chip, but they've got the whole stack. It's not just the XPU. We got really focused on the AI chip, but it's the AI chip plus networking. Thor 2, the technology that basically allows in the rack, out of the rack. And I just think, like, while we're focused, there's this $1 trillion number, and I keep saying about 25% of it, I think, will be custom. They are in the custom kind of going to be the market share leader the way NVIDIA is in the merchant. So if you kind of want to separate, there's $1 trillion and 80 to 90% is going to be NVIDIA. Well, there's about $250 million, we think, $250 billion, and I think 80% of it will be Broadcom. So if you just do the math, like, they're reporting like 10 billion in their custom AI number. And I think that could be 5-10 times in the next just couple of years. And I'm hearing rumblings on the street of some very, very, very big orders that are coming through. So that's rumor. Don't trade on it. I'm not telling anybody to do anything. I want to be very clear about that. But I just think they're the other side of the NVIDIA in the custom world. And custom's going to get bigger and bigger. Custom's going to get bigger and bigger because big companies are going to want to be able to differentiate with their AI stack.
Optionality. It's the theme. That's the AI theme. Everyone wants it.
We should have a list. A new list you should put out is it's not zero sum stupid. And we should talk about 2 names in the same category that you should,
that's going to be the title. It's not zero sum stupid. And when we go on TV, we'll drop it in there too as well.
Hey, by the way, we've got, I know in a couple of minutes, and you and I, man, this rips. This show is so fun. So for everyone out there, by the way, we can say, like, this will be official. We're going to memorialize this. We're going to put a nice wrapper and a bow around it. This pod is going to be out on Apple and Spotify, but we're going to keep doing it live. Like every week we'll do it live. You can join us, but then we'll put a little production work around it.
The lipstick will go on. Yeah.
We're going to get a little lipstick on this pig. What do we got coming up? I mean, that we can share. I know we got some really cool stuff that we can't share, but like, what do we got coming up? We've got.
So,
go ahead.
We had the Futurum AI 15 list that went bonkers. It went, I don't even know how many TV outlets it went on. We got the Cyber 7 list that got released recently last week that will get updated on a monthly basis. I think the next list that we're going to be launching, which correlates with kind of around the same time our website will finally be, our platform is going to be launching as well in the immediate future. It's going to be the DC10, the Data Center 10. That's going to be the next list of the 10 biggest winners of this data center spend that's not going away anytime soon. And you're seeing AI become that safety blanket during this turbulent times of geopolitical tension. Well, that was the gut check on this AI theme that's kind of in the early innings of this ball game, and it's got a ton of runway. So do you have anything else to add to that, Daniel?
No,
is that what you were getting at? I think I was.
What else we got going on? I mean, you and I are going to be we're going to be parading around New York in 2 weeks.
Oh, that's
on vacation. We're going to be there. On the tubes, on the TVs. We're going to be talking. We got something really big up our sleeve, but we can't say anything yet. But just know that our personal vision of using the next generation of research to power assets under management. We believe that there's going to be some big things happening from the Futurum Equities team. We also, Futurum, the parent company, has a number of evaluations that are going to pop across the tech space. So you saw you shared from the equities account some great data on the data platforms side. You're going to see more and more of that being shared coming from us on this side. So we're taking that deep knowledge that helps IT buyers make decisions, and we're going to be helping the investors understand what's actually happening inside of enterprises, which is pretty cool.
Yeah, the signal, the air to provide to investors, access, insights, research. So I gotta say, the second half of this year is gonna be freaking exciting. We can't reveal too much about that really exciting partnership that will be announced in the next couple in the near term. Let's just say that.
Yeah, we don't know exactly when.
Yeah, but
just say it's a whole box of awesome.
Yeah, whole box of awesome. And even more than that, Daniel and I will be in New York together in 2 weeks after he goes on his little vacay, which he will still be grinding during that time. But it's going to be exciting. Like, hopefully we get to go on TV at the same time together and just like do this format on a studio stage. That'll be fun. Yeah. But yeah, so tune in next week. This is going to be like a weekly thing, like Daniel called, and it's going to be probably it's going to maintain the same rawness, but it's going to look a little prettier on the eyes potentially with some wrappers. But again, enjoy the time off this week.
Best way to make it prettier, buddy. The best way to make it prettier is more shy, less Daniel.
No, not at all. Look at this hair. I'm like an alfalfa going on
but
right now.
Maybe we should start, seeing like biggest fans, and we could start like getting swag or something for everyone.
Ooh, that'd be fun.
Get our fans, who likes this hat? Who likes this hat? Anyone like this hat? Let's hear from it. Yeah.
Or is the little vest over here? I love the vest. I wear this vest everywhere.
That's a good one, isn't it? I love it.
It's super.
All right, man. It's been great. I'll close it up. Thanks everybody for being part of the podcast here, Futurum Equities pod number 4. Subscribe to us here on the X. We will let you know when it's available on the Spotify's and Apples and everything else that is coming soon. You're going to get it raw here because we don't screw around. We want to give the best signal to retail, the air you need to make great decisions. See you all later.